Assalamu alaikum wa rahmatullahi wa barakatuh. Welcome to the Campus Dialogues, a Muslim Views production in affiliation with MuslimFin. I'm your host Ali Sadi, and this evening we have another wonderful episode for you. And here to introduce our guest as per usual is my good friend and colleague Siraj Buzik. Siraj?
Assalamu alaikum, Ali. How are you doing?
Salam, alhamdulillah.
Like I always say, another week, another episode.
That's right, yeah.
And tonight, alhamdulillah, we've got a very interesting gentleman with us in the studio. Maher Jakut, welcome to the podcast.
Shukran for the invitation.
Maher, before we get stuck in, I just want to do a little background of you.
Okay.
So for those who don't know Maher co-manages the full suite of Sharia and ESG actively managed portfolios. He is a strategy lead on OMIC Sharia capabilities. He specializes in local and global equity and Islamic fixed income. Prior to joining the Old Mutual Investment Group, he worked at JP Morgan Chase Investment Bank and Riskura Consulting. Am I saying that correct? Riskura.
Riskura. Yeah.
Maher has completed his honours degree in financial analysis and portfolio management and holds an MBA from UCT's Graduate School of Business. He has 13 years industry experience and 10 years experience at Old Mutual Investment Group. Maher, welcome. It's an honor for us to have you in studio.
I know, the honor's mine. Where did you get that?
Is it outdated or is it elaborated?
No, I don't know. That sounds too much now. I'm just a normal guy. You know?
Maher, before we get started, I know we've got a lot of things we would like to discuss with you. Perhaps as a starting point, can you share, your journey into portfolio management and what inspired you to specialize in sharia-compliant investments?
Yeah, I mean, after matric, I think I was very lost, and I think most people are. It's very few people that find their niche early on, and what I mean by that is, what do you study? You've never worked. You come out of school, and my dad, being a chartered accountant, we sat with is it the student advisor? I'm not sure what they call that now at the university, and he said just. Put him in some business, like whatever business.
Something business related.
And at that time, if you work hard enough, whatever the situation you're in and they put you in, you will pass. But it's not necessarily that you will enjoy it.
Correct.
Right? So, and my advice there to the younger guys that are still in school, that are coming up, it's try to do as much job shadowing as you can. But anyway, that was my history. They signed me up for a BCom, and then went to go do my honors. And then in my honors class, we were actually talking about the asset management industry, and I thought, this is good. And I graduated in 2009, which was the heart of the financial crisis. It was tough to get a job. Guys that had left South Africa, working for your big asset managers in the UK, were coming back looking for work. So it was tough, and then I actually worked in property development. Some people will know that as you're working on the gebouw. But that was for a family friend, and that was good experience. Any experience is good experience. And then constantly I thought about, I've never given my finance degree a shot. And then I worked for JP Morgan. It was in Johannesburg. Johannesburg's not for me. I'm a Cape Town boy. I like the lifestyle. I often mountain bike and do things in our city that I like doing. And then I got the job at Riskura, and from there I applied for something at Old Mutual, and I've been there ever since. And I did want to leave Old Mutual once upon a time, and I think that was perhaps just impatient, but there are leaders that support you and guide you, and I'm grateful for those individuals. And then once I moved from more of a trading implementation role, I moved into an analyst role, and then from an analyst role, I moved into a portfolio management role and started managing money. Alhamdulillah, for our ummah, even though, believe it or not, that actually not a large part, but a significant portion of the Sharia funds, what we call AUM, assets under management, a significant portion is non-Muslim investors. So alhamdulillah is great.
Why is that? I mean, that's quite interesting that you mentioned that, quite a large portion of the client base is non-Muslim.
So I'm sure you're well aware of the buzzword ESG,
Mm.
right? So the environment, social and governance, and you know how that scores within a business, right? And green technology and this is a buzzword now, but Sharia compliant investing has been around a lot longer. So, and this is a pure assumption, is that individuals at the time wanted responsible investment, but there wasn't ESG in investing at the time. So there was Sharia compliant investment. So what is Sharia compliant investing? It's, you know, we cannot invest into alcohol, gambling, weapons, adult entertainment, etc. And if that resonated with you, and you didn't care about the word Sharia in front of investments, then you would invest in the funds. And other than that, I would say the only reason that somebody would go into a Sharia fund is for the performance then, if they're not thinking along those lines. So that's the two assumptions that I'm making, but we have the data. If your name is Peter, then your name is Peter, and you have invested into the funds. So maybe we're off by a couple of percentages because maybe that Peter is Muslim. You know.
Meyer, you're actually one of the few portfolio managers in South Africa that is running Sharia-compliant, portfolios. What do you find? You mentioned a few of these, things that Sharia portfolio managers can't invest in. So you mentioned some of the things like gambling and various other things. But from a strategic perspective, what is the difference between a Sharia-compliant portfolio versus a conventional portfolio?
Yeah, so on the Sharia side, I think there are a couple of principles that you need to understand. And Sharia will follow moral, ethical, and religious values. It's very important to understand that. So what am I saying? We are not allowed to invest in riba. So which means that the banking sector would be out. Right?
And
but
riba being interest.
Riba being interest. So let's just think of the concept of interest, right? If there's no interest, it will promote fairness because you can't take advantage of me as the borrower, right? But then there must be another way, and one of the other principles is the sharing of risk, right? So if I'm interested in a certain deal or a business, it give me the money, but you're more of an equity partner. And then there's also the no gambling or speculation. In Arabic it's called gharar. And that's almost like a risk mitigator, right? So I would say those are some of the principles that differ from Sharia compliant investing and conventional investing.
So do you find that limits your ability to get returns within your portfolios, or does that in certain cases give you guys advantages versus in terms of the conventional and Sharia portfolios?
I would say that was perhaps the case pre-1992, when Sharia compliant funds, when it's infancy and it's okay, what's this new phenomenon about Sharia compliant investing? Now there are various funds, from equity funds to balance funds to income funds that individuals can go into. But just coming back to the question, I think you were limited because if you think about it, a large part of the Johannesburg Stock Exchange, which is what we call the JSE, has a financial services sector.
Yeah.
So if you strip that out, what are you left with? Right? So you're left with a big resources sector, which is your diversified miners, gold, platinum, industrials, consumer discretionary, telecoms, like your MTN, your Vodacoms, Bluetel, etc. So if you're stripping out that, it upweights everything else, right? However, Sharia compliant investing has evolved, but also the regulatory environment has evolved. So what I mean by that is that we can now invest offshore. So can I now, I cannot invest in a conventional bank. Can I invest in a Saudi bank? Yes, I can. Right?
Oh,
So now
that's good.
the playing field is a lot broader
Mm.
and bigger, and we can get into those businesses.
Mahir, with everything happening in the world today, with the global markets constantly evolving as well, what challenges and opportunities do you see for Islamic investments today?
I think we've got a long way to go in South Africa.
Mm.
I think Malaysia is far ahead of us, and I think that from a regulatory perspective, firstly, I think there should be more scholars,
Mm.
finance scholars that we can reach out to, and then we face an interesting question often as fund managers, where we can't invest in something, but our competitor can invest in something, but they both have Sharia boards. Now, a question can get asked is that, okay, I want to invest in the Old Mutual Global Islamic Equity Fund,
Mm.
and I also want to invest in the competitors fund.
Yeah.
Is my money still Sharia compliant?
Yeah.
Right? So both have boards. So I think what we need as an industry is, I think we need a regulatory body on top of that, which is going to promote innovation, collaboration, and then you can actually test a manager's skill a lot better because there's just one universe to invest from.
Okay.
I think that is important. And then there's another challenge. If you look at Sharia equity funds, it's roughly 20 billion in terms of the makeup, and there's a lot more Muslims working in corporates that are not investing their pension funds,
Mm.
not specifically by choice, but in a Sharia compliant manner. So, our job is to educate, but also to let our Muslim people know that if you're going into a corporate, put up your hand. It's your right to say, but I want my pension fund invested in a Sharia compliant manner.
Mm. Mm.
There's nothing wrong with that, right? And in that way, you get more Sharia compliant managers on what we call a members level choice. You are a member of a pension fund. So I want my money in a Sharia compliant pension fund. And then you will see the growth really accelerate in the Sharia space. And it's not like there's not enough funds. There's enough funds. We've been doing this for a very long time. Solid track record, good performance. It's there. So we do require, and I guess this is what this podcast is about, to inform people that actually, listen, you can go and you can tell your manager, I want my money invested in a Sharia compliant fund. Because what happens if that individual grows within that business and retires at the age of 60, and they've been investing in banks, so that riba component is coming through, and what position is that individual in then at the age of retirement? Is that individual going to go clean that money? I'm not sure.
Yeah.
So I think that's a big challenge, but I think just having this discussion helps.
Absolutely, and I mean that's what this show is all about. It's about creating awareness and making our audience aware that they can go and ask those questions, and at least ask the question. Go out there, speak to management. When you start a new job, check to see if there is a Sharia compliant option within your pension funds. So that you can make that choice. Absolutely. But you were mentioning that that you talked about a track record, and you said we have a long-term track record. We can show that we have the performance. Because in the past, when people looked at Islamic investments, they thought, oh, it's expensive. It doesn't perform as well as the conventional. Maybe share some of the success stories that you've had with some of your portfolios in recent times.
Yeah, no, absolutely. So. Those myths need to be debunked. The fact that Sharia compliant funds cannot outperform. So at the end of 2024, no, at the end of 2023, we won an award, a Citywire award, for the best global portfolio manager.
Wow.
Right? So that was on its performance, but risk adjusted. And we won that award. And that wasn't just against Sharia peers. So we won another award that year, which was against Sharia peers, which is the best 3 years and 5 years, and that was out of London, a global award. But this specific award was so nice because one, it wasn't a cushy award. You know, you also get awards where people tap you on the back for championing Sharia-compliant investing, and that's great, right? Because you are growing the Sharia industry. Alhamdulillah, that's fantastic. But performance is on the scoreboard. It's clear. It's for everybody to see. And for a Sharia-compliant fund to win that award among Sharia and non-Sharia peers was fantastic, right? So alhamdulillah, that was something that we're extremely proud of at the Old Mutual Investment Group. And there are many instances through the cycle when that happens.
Maher, you mentioned earlier about some of, like, for example, creating awareness around the Sharia-compliant investment options that you can have. What are some of the challenges you still find today? I mean, if you look back, I think 5, 10, 20 years ago, we didn't have the same options we have today.
Yes.
And today we've got almost, a Sharia-compliant option for every conventional product out there in the market. Yeah. But what are the challenges you still see today in terms of the take-up of the Sharia-compliant products?
That's a very good question. I think there's always going to be education. There's always going to be these type of discussions, and this helps, and every little bit helps. I think if you look at where the wealth is clustered in the Muslim community, it's still the generation, I would say, from 40 to 40 and above, right? But were our forefathers educated in this manner about these products? No, right? So in the Muslim community, it's about, no, I'm going to buy that property. I can touch, I can feel it, I can see it.
Yes.
Yeah.
And then when I build myself, I'm going to buy the second property and third, and and there's nothing wrong with that. This is a different asset class. Equities, sukuk is a different asset class, and the thing is, don't put all of your eggs in one basket. And also, there's a need and an age that can be more risky. It's a willing and able question. I may be willing to be high risk, but I have 4 children. Maybe I mustn't be so. Take such a risky investment decisions. So I think the education is always going to be there. But a positive out of it is that now that individuals are being educated, you're already aware about investments. And then as a Muslim, you often ask, okay, here's an equity fund. Is there Sharia compliant equity fund? And then the individual can often just compare, and make those type of decisions. But a couple of years ago, there was maybe Al Baraka Bank. Now you've got every single bank that has an Islamic window that offer similar products. So there is no excuse.
Yeah, absolutely. There is no excuse, and like you rightly said, there are these Islamic windows, and more of the financial institutions are starting to make different types of products available. So now you're finding, the insurance coming through, takaful, medical aid, banking products, lending products, commercial property finance products, and obviously also with investments. Maher, but I wanted to get your view on, what your outlook for, kind of 2025. Where do you see markets going for the year ahead? And just a bit of, for the audience that is invested in Sharia-compliant portfolios. How do you see that doing over the next, let's say, 12 months or so?
Yeah, I think earlier I spoke about the fact that there was a limited opportunity set within the South African market, and we diversify. So in our funds, we're always going to have some global, which creates that diversification. And we look for good businesses that have the ability to grow, but we want to get it at a discount. Right? It's not always that businesses tick all of the boxes, but it's interesting times. It's interesting times because just if you follow the news, you would have seen that our South African Reserve Bank cut the rates by 25 basis points. And what that does is it puts more money in consumers' pockets. Right? Economies are driven by consumption. So in the US, that number's roughly 68%, 68% of their GDP comes from consumption. Where in the US, the Fed actually paused. Right? Rightfully so, there was an inflation print and it came out higher than expected, and they paused. So which means that where the markets thought that they were going to cut, they didn't. And you know, if you follow consumption, people spend, they spend in businesses. Those businesses print profits. The share price then follows those earnings because profits have gone up. That's really what happens in the markets. But in saying that, I think it's going to be a volatile and a rocky road for global markets. There's a lot going on. I think there's a few things that need to happen, such as the Russian-Ukraine war, some stance on the Middle East conflict. I think globally, that's going to still bring volatility. When people don't know what's going on, you always get the graph looking up and down, high peaks and low troughs. And how you mitigate that, at least how we try to mitigate that is being risk cognizant. So having a quality bias, investing in the, not really chasing the trends, because you can fall quickly when that falls. You can see that what we call the Magnificent Seven, which I'm sure everybody knows is your Nvidia, your Tesla, your Google, which is called Alphabet, Meta, which is your Facebook. So those companies, the earnings have slowed down, and they've really been driving the market over the past couple of years. So I believe that will cool off. Other quality companies will where we see value, will do better. And then we are positive on South Africa. The GNU seems to be playing out how it should be playing out, where there's not complete control, but people that are going to fight back on different policies. Yeah. So we are bullish on what we call SA Inc., which is your South African businesses. And I say SA Inc. because actually a large part of the JSE, if you look through to where they get their revenue from, it's actually not from South Africa. But we do believe that managing risk through diversification is key. So we will have local and we will have global. And in our balance fund, we'll also have Sukuk. So it gives you it gives you a smoother return path. Which is what we how we try to grow clients' wealth.
Absolutely. Right. You mentioned earlier countries like Malaysia. Is Malaysia seen as the benchmark in terms of Islamic investments and innovation? And then also you mentioned earlier about Sharia boards, about the different companies having different Sharia boards. Do you find that there is a difference of opinion between certain investments that people look at or can take up? Or what is your opinion on that?
So Ali spoke about different products, and I think from a product perspective, Malaysia's really forward thinking, and they've got a lot more products that we still going to see coming forward in the South African market. We follow the IOFI standards and the interpretation of the IOFI standards. Right? So in Sharia compliance, there's always a qualitative test and a quantitative test. So what I mean by qualitative is that you and I know that there's never going to be an alcohol company where that's their core business in a Sharia fund. That's qualitative, right? So that, what is its core activities? What's the main revenue driver there? Right? Is that permissible or non-permissible? Right? So you're either getting a tick across there. And then when you move on to the ratios, it's the IOFI ratios. So a ratio is 5% of non-permissible income is the max that you can have relative to the revenue of the company. So you take the what we call non-permissible income, NPI, can't be greater than 5% of revenue, right? And then that gets paid out in any event, in something that we call a non-permissible income calculation, because it has to be paid out because there are people that are investing for Hajj and Umrah in our funds, right? So we strip that out on a daily basis and we pay it out to a charity, and then the charity then, we are not allowed to market that. I want to be clear. That is not a selling point. But we have to purify our funds for the Muslim investor. Right? Another IOFI rule is the debt ratio, which is 30% asset value or market cap. The total debt number of the business cannot be more than 30% to the asset value of the business or the market capitalization of the business. Now, if you look at that, especially that debt ratio, what does that do to your universe? And I think that is what you must understand about Sharia-compliant investing, is that when you follow that rules, you're investing in companies that have lower debt. Done. So that gives you a quality universe, which is great, because it's actually the excessive debt that companies take on where it becomes an issue. So the word excessive is important there.
No, great. That was a great explanation, Meyer. I'm just thinking that we almost running out of time, but what I want to end with is a question around what advice would you have for let's say the young investor or someone who hasn't invested in a Sharia compliant investment before, and maybe give us a nice hot stock tip.
I think advice to the youngsters that want to understand investing is to first know the difference between investing and speculating. Right? There's a lot of tech out there. There's a lot of people trying to say, buy this and sell this, and if you don't know what's going on, it really is a gamble then, right? So know yourself. I think that's very important, because even if you invested in a good company and for some other reason they print results and the share price goes down, and now you're in a panic state. So I think as an investor, you need to know what you're buying. And through the years of being a portfolio manager, sure did I get to know myself. Markets are not always in your favor. It's fantastic when you're doing well, but when you're not, you need to know why you bought what you bought. And I think that's important. But for individuals that want to get into Sharia compliant investing, I think understand investments first, and then there's enough content to understand the IOFI principles and what Sharia investing is. And I think that is important. And sure, a stock tip. I think Novo Nordisk
Okay, we had this one before.
is a good company.
Yeah.
So, okay, let's change it up. Maybe the Novo Nordisk competitor, Eli Lilly.
Okay.
Right. So these two companies control diabetes in the world. And so now, if we look at that investment thesis first, it's a pharmaceutical company. We know a lot of people that have diabetes, right? But they also control weight loss, right? So, I mean, if you just look at Netflix or if you go onto YouTube, you can see that actually Hollywood is crazy about this weight loss drugs, right? Or some individuals that wanna lose weight really quickly, but it's expensive, and they control that industry. So that's what we call this business as a good moat, right? Or wide moat. Barriers of entry is high. They've got patents, right? That's the first thing. So, okay, fantastic, great business. It's in pharma, sharia-compliant. Their core revenue is pharma. Highly profitable, right? They print truckloads of cash. There's a metric that we look at, cash flow return on invested capital. That's also very high. So on the quality metric side, it's very good.
Okay.
Does it have the ability to grow, right? So, I mean, I shouldn't be telling you that you need to think about that. Is diabetes going away, right? Does it have the ability to grow? Of course. But what you need to be cognizant of is that are there other players? I'm just throwing names out there like an Aspen, right? Or a Roche, right? Other big farmers. Can they also get into weight loss? Of course, right? They can. So competition will come, right? Competition will come because usually when you do well, other people see and then they come in. So be careful of the risks. But does this business have the ability to grow? We think so. So growth, great. Quality, we spoke about the profitability and lower debt, fantastic. And then now we need to look at valuation, right? Which requires probably a longer discussion. But is it cheap or isn't it? Is it expensive? That's and usually there we look at price to earnings ratio and relative to itself and relative to its peers. And I don't want to get into jargon. I just on a high level, I want the listeners to think about this. Is it a quality business, right? In any deal that the listener, somebody watching this podcast is gonna say, okay, there's a deal on the table. Is it a good deal? Is it quality? Is it making money? Right? Is there a theme that is backing it? Right? So does it have the ability to grow? Right? Is there a trend that is positive that, listen here, this is going to work? Right? Now, am I paying too much or am I paying too little? Right?
Yeah.
And that is how you've got to think, and that's how we think about investments. Right? So I think that answers your question, Ali.
No, that was a fantastic answer. Maya Jakut, shukran for being on our show. We look forward to having you back, and thanks for all the tips. We really appreciate it, and I'm sure Siraj feels the same way.
100%.
Yeah, absolutely. And there you have it, guys. If you like this episode, please give us a like, subscribe, hit the bell icon, and assalamu alaikum wa rahmatullahi wa barakatuh.